Okay,
Sorry.
so yes.
Disclosed in books, does that mean it should be shared? It should not appear in the books anymore.
What is that?
It's just another question that I read.
If it says if it says goodwill is to be disclosed in the new books of the in the books of the new partnership, then that's mean that
Yeah.
it has to appear.
It has to appear.
Yes. However, it says
Oh.
not to be disclosed.
Well, okay.
Then, yeah.
Okay. Thank you so much.
Okay. So question 4, we are asked to prepare a journal entry to record the new partner's contribution to equity of the partnership. Ne? So we have to show a journal entry of how. Am I not recording? Okay, I am. Of how of the amount that the new partner contributed to the partnership. So obviously, because he is bringing in money into the partnership, our bank account is increasing. So in this case, we'll have bank of how much did he pay in total. How much did Parker pay in total?
440.
Sarah, may you please repeat what question 4 is about?
Okay, question 4, you are asked to prepare a journal entry to record the new partner's contribution to the equity of the partnership. What, excuse me, what is the new partners contributing to the partnership? Ne? But if you have, I think the solutions with you, I'm saying that when it comes to the solutions, the contribution of the new partner was done separately or was done together with the recognition of goodwill. But recognition of goodwill is not part of question 4. There is part of question 3 where you have to calculate your goodwill and recognize your goodwill. There is question 3, and then question 4 has to do with journalizing the total amount or the total capital that was brought in by the new partner. So in this case, we have bank. Are we together? Do you understand?
Yes.
Yes. Okay. Yeah.
So we have our bank will increase on the debit side, and then we credit our partner's account, which is now capital Parker, with the same amount of 440,000, and then we write our narration. I do this. Okay, so we write our narration as to this is the capital that has been contributed. Capital contributed by what's it? By partner, or you can say by Parker. Yeah, by partner or by Parker, like that. Okay, do we understand question 4?
Yes.
Yes.
Any questions before we move on?
There at goodwill. At the contribution by the partner. Now, if the questions comes like the partner what contributed inventory of an amount in cash, do we add the amounts together?
So you will have, okay, when you are to that's a good question. Now when you are to journalize the entry, So this is
Yes.
what you do. You will have bank, ne? Because bank and inventory are two separate accounts, ne? You will have bank of the total amount that he contributed, and then you will have inventory, ne? Inventory of the total amount. Again, inventory is an asset, obviously, so it will be debited of the total amount or the worth of the inventory. And then from there, you have now your total capital. Now, total capital includes the money contributed and the assets that partner contributed. So you have to add your bank and your inventory together, and then you credit it with that amount.
Okay.
Yeah. So we quickly move on to our next question, which is question 5. Question 5.
Yes.
Question 5, you are asked to prepare a journal entry required to redistribute the reserve so that the equity of the existing partner is adjusted to reflect their share of those profits. So we need to prepare a journal entry that shows the redistribution of reserve on the existing partners. In other words, on the old partners, existing partners, on the old partners. Ne? So I think in my first session, I explained what reserve is. Usually reserve, this is the amount that you put aside in all the years, the amount that you have been putting aside in all the years. We said that when you have a business, now when you're in a partnership, you don't just share that all the whole profit that you make, you don't just share it among yourselves. So you take a certain amount that you put aside to stay in the business as a reserve. No, that is the reserve. Now, because of the new books that need to be the new books that you have to prepare, says that now in this case, you need to redistribute the reserve that has been existing in the business. So let's prepare our journal entry to redistribute the reserve. So in this case, we'll have question 5. Let me just put it here. So question 5. So how much is our reserve? According to the question, our reserve was how much?
60,000.
Of 60,000, eh? So we need to redistribute that 60,000 among the old partnership, among the existing partnership or partners, eh? So again, a reserve, this we said that this is money put aside or profit put aside in a partnership. So we are redistributing, or we are distributing it to our partners. Will our partners will the partners' capital accounts increase or decrease if we have to redistribute the reserve? We will have to credit or debit our capital accounts.
Is it capital or current?
Debit.
Eh? Okay, current account. Okay, current account.
We credit.
Then we have to credit. Do we understand?
Yes.
Okay. So we move on. So we have reserve. Our reserve is how much?
60,000.
60,000, ne? And then now we have, okay, in this case, now we have our current account. But I think there are some questions there, because we say that in a capital account, you only record capital contributed by the members. By the partners, while current account, that's where you record all the transactions that occurred between the partners and the partnership. However, there are some questions. There are some questions where you'll be asked to draw up capital account, né? Or there are some books where they include also the transactions that happen between the partners and the partnership in the capital account. Né? So please be very careful. You should with what the question is asking you. Either to draw up now the capital account or the current account, and you should know the type of information that you record in both the two books.
Sorry, Sarah.
Mm-hmm.
I know. What is the difference between a partner and a partnership?
A partnership is the business. Partner is now the owners.
The members.
Yes, the owners
The
of
members.
I wouldn't really say it's the members, because that's a partnership company. Members is usually for close cooperation, but it's more like members now. It's the same as members of a close cooperation company. But in this case, in the partnership, they are called partners.
Yeah.
Yeah. So we have current account of Sarah. So in this case, Sarah will get 60,000. We multiply with 3 over 5. How much will we get? How much will we get?
36,000.
Then we get 36,000. And then we also have current account. Oh, excuse me. Current account, Mary. 60,000. 2 over 5. So it's how much?
24,000.
Then we get 24,000. And then this is to show, or this is what? A journal entry for the redistribution of the reserve. Distribution of the reserve. Any questions?
So we only narrate if they ask us to show the narrations,
Eh?
We only do the narration if they ask us to do the narration, or it's obvious that we must do it.
It's obvious that you should do it unless you are told not to. But if you are not told, then you have to.
Oh, okay.
Yeah. Then we move on to the next question. Question 6, prepare the current and capital accounts for the partners after the admission of Mark. So we need to prepare their capital and current accounts. So that is question 6. So capital. Let me quickly just draw up a table. So we have the details, and we have 3 partners, details, and then we have 3 partners like that. So we have Sarah here. It says of the new partner, so you also need to include the, it says of the new partnership, so you also need to include the new partner's account. We have Mary here. And then we have Parker. Same applies to the credit side. We have Sarah. We have Mary. And then we have Parker. So we are starting off with our capital account. Okay. So we are starting off with our capital account. So the first thing that we record when we are drawing up our equity, our assets, our assets account, our equity account, and our liabilities account. The first thing that we said you record is the opening balance. The same way we drew up ledger accounts of our assets that we reevaluated, should be the same way we draw up our capital account. So there should also be a balance. Okay. Oh my PC's battery is running low. Thank you. Okay. So our capital accounts, our balances, those are the balances that you are given in the statement of financial position. Yeah, thank you very much. Okay. So in this case, now we have a debit side here. And then we have a credit side. Thank you. So when it comes to capital accounts, decreases. Capital account decreases on the debit side and increases on the credit side. That is an equity account, and all equity accounts increases on the credit side and decreases on the debit side. Okay. So this is what you do. Now, because our capital, we said now when it comes to a balance brought down, you record it on the side where the account increases. Capitals increases on the credit side. Therefore, if it's a favorable balance, then it will have to be recorded on the credit side. So looking at the information that you are given, it's a favorable balance. So we have balance. Balance brought down. Of Sarah is how much? What is Sarah's balance brought down?
28,000.
28,000.
Not 29, but 28. Not 29, but 28.
280,000.
Or 280,000.
288.
And then Mary?
Yeah. 325,000.
325.
25,000.
325,000. So from there, this is what you do. From there, you go back to your journal entries, You go back to your journal entries, and then you record wherever you see the word capital, You make sure that you transfer that amount to their capital account. Are we together?
Yes.
So, yes?
Wait a bit. Wait.
Okay.
It's okay.
Can we continue? Okay, so we said that when it comes now to the capital account, you go back to after writing or your balance brought down, you go back to your general journal, and wherever you see the word capital, you make sure that you record that amount. So the first one is we have capital Sarah. When our revaluation of land, we said that it was an increase, and our Sarah's capital account was credited with 78,000, and Mary's capital was credited with 52,000. So we need to record that it was credited, therefore it needs to be credited. So in this case, we have revaluation on land and building. Revaluation of land and building. Mary was how much? We said it's how much?
78,000.
78,000.
78,000. Oh, I wrote in a wrong column. Sorry.
Yeah.
Revaluation. Tell me you're irritating me. Revaluation on land and building. Of 78,000. And Mary has how much?
52.
50? 52,000.
52,000.
Okay.
52,000.
52,000. And Parker has nothing. Ne? So we leave it open. We move on. We go back to our information again.
Revaluation.
What is the next evaluation? What is the next evaluation?
Revaluation.
Machinery, right?
Evaluation. Machinery.
Okay, so we go back to revaluation. We record our revaluation of machinery. Again, a revaluation on machinery. The partner's capital accounts were credited. Therefore, we need to credit them. We have revaluation. Revaluation on machinery of
6,000.
Sarah got 6,000.
Sarah has 6,000. And then?
And Mary got 4,000.
4,000. Okay. So going back to our information again. After machinery, we have
inventory.
We have inventory. Now in this case, our partner's capital accounts were debited, ne?
Yeah.
Therefore, going back to the information, we need to debit them. We have revaluation
On inventory.
Revaluation on inventory. Sarah has how much?
$3,000.
Sarah has 3,000 and Mary has how much?
2,000.
2,000. Okay. We move on again. We go back to our information. After inventory, we have accounts receivables
Account receivable.
of 10,000. Okay. So we have accounts receivables. The partner's capital accounts were debited. Ne? Therefore, you need to debit.
Debited.
Oh, sorry. Revaluation on receivables. of 6,000. Sarah has 6,000 and Mary has 4,000. Do we understand so
4,000.
far? Okay. And then we move,
Yes.
we go on again to our information. We check, now we are done with our revaluations. However, we still have information that were recorded or on our that are to be recorded in our capital accounts. So if you check again, there is still capital appearing, ne, of goodwill, capital Sarah and capital Mary, of these two amounts. So goodwill was credited. Therefore, when we go to our capital account, we said goodwill. So in this case, we have goodwill. Goodwill, Sarah has how much?
115, 200.
115, 200. And then Mary has how much?
76, 800.
76, 800. Okay. And then going back again to our information or to our general journal, we are now here at goodwill. We still have capital here, capital appearing, capital Perker, of bank this. So again, this was credited to Parker's capital account. So we also need to record it. So we have bank in this case
Then
of how much?
440,000.
440,000. Okay. And then going back again, we go again to see if we still have information that had to do with capital. So we did capital. So that was it, ne? That was it that had to do with capital. So we move on. So there are no other information that are requiring us to include in our capital account. So the next thing that we do, since those are the only information that are to be recorded in the capital account, we'll then have to balance of our capital accounts. So looking at this, we can already tell that the credit side is the biggest. So let's quickly balance. Sarah is how much? What is Sarah's total? The balancing figure?
479, 200.
We have 479.
200.
Oh, 200. Now in this case, where do we get this? Is we are trying to balance off, and we said when you are balancing off, you add your total, you add all the amounts in the columns. For example, Sarah, you add all these amounts, and then you write the amount somewhere on top here. You add on the debit side, Sarah. Then you compare the debit and the credit side of Sarah. You check the bigger amount. Obviously, the credit side is the biggest. There's the biggest amount, so you record it on both sides. So 479, 200 is recorded on both sides. And then we move on to Mary. Mary has a balancing figure of how much?
457, 800.
457,
800.
457, 800. And then Parker, obviously this will be 440,000. And then Mary here, we said we write the bigger amount on both sides. So 457, 800 and 440, like that. Okay. Oh my goodness. And then from there, the next thing that you do is you find the difference on the smaller side and you name it balance carried down. Carried down. So what is the difference on Sarah? So 479,200 minus 6,000 minus 3,000 will give us a total of how much?
470,200.
470,200. And then Mary?
200.
451,800.
451,800. And then Paka obviously is 440 minus 0. Here we have 440 like that. Do we understand?
Yes.
Yeah, but may you please explain why reserve we are like recording reserve in the what why reserve is affecting the partner's current account and not the capital
Okay.
account.
Why is reserve not affecting the capital account? Because we said that in the capital account we only record capital when we only record capital information, we only record our capital contributed. And then in the current account, that's where you record all the transactions that happened between the partnership and the partners. If we look at reserve, these are profits, money reserved in the business, those are profits. And where do we record profits made in the business? We record them in the current account. That's another transaction that happened between the partnership and the partners. That has to do with profits. So we had to record it in the current account. Is it making
Thank you.
sense?
Yes.
And the reason why we are what? We are recording revaluations on now the reason why we are recording revaluations in the capital account, because these revaluations of our assets will affect our equity, or in other words, it will affect our capital that is contributed by the partners. If now in this case, if the assets increase in value, then obviously our capital or our equity will increase. And when our assets decrease in value, our capital or our equity, in other words, will have to decrease. Therefore, that's why it's recorded in the capital account. It will affect your capital that you contributed in the business. And then current account, that has to do with transactions that occurred between the partners and the partnership, where a reserve is another profit that is shared among the partners. Therefore, that's why it's included in the current account. Is it making sense?
Yes.
Okay. So we are asked to draw up a current account. We have 3 minutes. So we are drawing up a current account quickly. So there are 8. So we have current account. Current account. Okay. So in this case, it's the same ledger account of both the partners. And then we have Mary. And then we have Parker. Again, we have Sarah. Mary. Okay. Now again, a current account. This is another equity account. Therefore, it increases on the debit side. Ne? And then it decreases. It decreases on the debit side and increases on the credit side, like this. So the first thing again we record here is the balance. So we are given the balances. I think we are given the balances in the statement of financial position. So we record our balance brought down first. What is our balance brought down of Sarah as per the financial position statement?
Is 208, 540. 208.
208.
540.
540. And Mary?
129.
129.
460.
460.
4.
460.
460. So Pekka, there is nothing. There is no balance. So let's move on to our information. So the same way we recorded in the capital account name is the same way. So we need to go back to our general journal. We go back to our general journal and then we check where is the current account appearing at. So it's only appearing at reserve, ne? And it's credited. Therefore, we need to credit our current account with reserve